Imagine this. You finally find the car you've been dreaming of. The dealer says it's yours until they check your credit. Suddenly, you're either approved with a low interest rate or hit with sky-high payments you can't afford. All because of three little numbers: your credit score. Credit scores can feel like a mystery, but today we're going to decode it. By the end of this video, you'll know exactly how credit scores work, what impacts them, and, most importantly, how you can take control of your financial future starting today. Before we dive in, if you're serious about learning practical money skills that can change your life, make sure you hit that subscribe button and turn on the bell, because we break down topics like this every single week in a simple, beginner-friendly way. 1. What is a credit score? Let's start simple. A credit score is basically a number that tells lenders how trustworthy you are with money. Think of it like a financial report card. In most countries, especially in the US, this number ranges from 300 to 850. A low score like 580 signals risk. A high score like 750 or above signals reliability. And here's the kicker. You don't have just one credit score. Different agencies and models calculate them slightly differently. But for beginners, focus on FICO and VantageScore. Those are the ones most lenders use. 2. Why credit scores actually matter. Now, why should you care? Well, your credit score can literally shape your life. Want to buy a car? Your credit score determines if you get approved and how much interest you'll pay. Want to rent an apartment? Landlords check your score to see if you're a reliable tenant. Want a mortgage someday? A strong score can save you tens of thousands of dollars over the life of a loan. Even some jobs, especially in finance, look at your credit history. So yes, credit scores aren't just numbers. They're gateways to opportunities. If you're already seeing how important this is, go ahead and tap the like button. It helps more beginners like you discover this video and start taking charge of their finances. 3. How credit scores are calculated. Okay, now let's pull back the curtain. What actually makes up your score? There are 5 main factors. 1. Payment history, 35%. This is the biggest one. Lenders want to know, do you pay your bills on time? Even one missed payment can tank your score. 2. Credit utilization, 30%. This is how much of your available credit you're using. Example, if you have a $1,000 credit limit and you've spent $800, your utilization is 80%, which is bad. The sweet spot? Under 30%, ideally under 10%. 3. Length of credit history, 15%. The longer you've had credit, the better. It shows stability. That's why closing old accounts can sometimes hurt your score. 4. Credit mix, 10%. Do you only have credit cards? Or a mix like a student loan, auto loan, and a card? Lenders like variety. It shows you can handle different types of credit. 5. New credit, 10%. Every time you apply for a new loan or credit card, lenders do a hard inquiry, which can lower your score a little. Too many applications in a short time looks risky. Common myths and misconceptions. Let's clear up a few things, because there's a lot of bad advice out there. 1. You need to carry a balance to build credit. Wrong. You can pay off your balance in full every month and still build credit. In fact, that's the smartest thing to do. 2. Checking your own credit hurts your score. Also wrong. That's called a soft inquiry, and it doesn't affect your score. Only hard inquiries, like applying for a loan, can drop it slightly. 3. A debit card builds credit. Nope. Debit cards don't report to credit bureaus. Only credit accounts do. 5. How to build credit from scratch. So let's say you're just starting out, or maybe you're rebuilding. What do? Start with a secured credit card. You put down a deposit, say $200, and that becomes your limit. Use it responsibly, and within 6 months, you'll start building credit. Consider becoming an authorized user on a parent's or sibling's account, as long as they're responsible. Their good history will reflect on your report. Look into credit builder loans from local credit unions. They're designed for beginners and help establish a track record. The key is simple. Show consistent, responsible behavior over time. That's what lenders want to see. 6. Smart habits that boost your score. Once you're on the path, here are the habits that will accelerate your progress. Always pay on time, even if it's just the minimum. Keep your utilization low. Treat your credit card like a debit card. Don't apply for too many cards at once. Review your credit report at least once a year for errors. If you've ever tried one of these strategies, drop a comment below sharing your experience. Not only will it help others, but it also builds a community where we all learn together. And hey, while you're there, don't forget to subscribe if you haven't yet, because more credit and finance guides are coming your way. 7. Mistakes that kill your score. Now, let's talk about the landmines you need to avoid. Missing payments. Even one can drop your score by 100 points or more. Maxing out your cards. High utilization screams risk. Closing old accounts. This shortens your history. Applying for lots of new credit in a short period. Remember, building credit is a marathon, not a sprint. 8. Protecting your credit. Your credit score is valuable, so protect it. Sign up for free monitoring tools like Credit Karma or Experian. Watch for identity theft. If someone opens an account in your name, it can wreck your score. Freeze your credit with bureaus if you're not planning to apply for loans anytime soon. It adds a layer of protection. 9. Long-term credit strategies. Finally, let's zoom out. A good credit score isn't the goal, it's the tool. The real goal is financial freedom. With a strong score, you'll qualify for lower interest rates, saving you thousands. Get approved faster for homes, cars, and business loans. Have more financial flexibility when opportunities come. So don't obsess over every single point. Instead, focus on healthy financial habits that naturally keep your score strong. All right, we've covered a lot. What credit scores are, why they matter, how they're calculated, the myths, how to build from scratch, habits to boost your score, mistakes to avoid, and strategies for the long run. Your next step? Take one action today. Maybe it's checking your report. Maybe it's paying down a balance. Small steps compound into big results. If you found this video helpful, make sure you smash that subscribe button, give this video a like, and share it with a friend who's just starting their credit journey. And if you want to keep learning, check out my playlist on personal finance basics. I'll leave the link right here. Thanks for watching, and remember, mastering your credit score isn't about the number. It's about unlocking freedom for your future.